Let's get to Apple, because Tanny flagged Apple. You like Apple, but do you like Apple at this price? Because I suppose it goes back to what we were just talking about the 10-year paper, because you did mention that we didn't see any kind of outsized move on the 10-year paper when it came to what Fed Chair Powell said. But again, the bond markets have been incredibly distorted. You just have to hear, we were speaking to Jim Caron over at Morgan's. He was suggesting 3.5 by the end of the year. Schumacher over at Wells Fargo is looking 3.4 to 3.7. So if you're an investor and you're watching now and there's this prospect that you could see, and perhaps you're not too savvy about the fact that when that 10-year paper goes up, the tech stocks are going to get hit, would you be buying now aggressively, or would you just be saying it, okay, let's dollar cost in, perhaps nibble at the edges, and then see what happens over the course of the next 6 to 12 months?
Yeah, it's a good question. I think we're more in a dollar cost in average, type strategy right now. The reason why I say that, it's not because we're necessarily bearish, but it's because there's still a lot of volatility. There's still a lot of unknowns. Whether rates go to 3.6, 3.7 for the 10-year, we don't think so, but is there a possibility of doing that? Certainly, if inflation data continues to come in, hotter than expected. But we're starting to see evidence of, inflation data coming down. Even real-time inflation gauges suggest that month over month, you may see the CPI actually being down 30 basis points. So it's in our view unlikely that we're going to go above 350. If that's the case, I think stocks like Apple are going to do very well, not just because they're growth oriented, but because they're defensively oriented as well.
I don't know whether that's a consensus view, and I feel like the jury is out there, because we just had a conversation with Professor Hanke of Johns Hopkins, and he believes that inflation is here to stay for the long term. The stock of Apple is down 10% year to date. The NASDAQ is down 23% year to date. So the profiling that you're seeing over here, to my mind, is also one where you believe that at any point, Apple is a safe bet. And with the event coming up on September 7th and the launch of iPhone 14 being much awaited, that could be another catalyst.
We think so. I think there's going to be perhaps a couple of surprises. There's some discussion that there may be a satellite function on the new iPhone 14, which is going to be, we think, quite disruptive. There's possibility for the company to announce other items that I think would be quite attractive. A new HomePod with a screen, new AirPods. All of these are items that I think consumers would be likely to upgrade, given that perhaps their products are a couple of years old now, and it's a good time to be upgrading to those types of new innovations.